ExamPrep.School. Indiana Personal Lines Insurance Exam. There are 4 practice exams in this series. This video covers Practice Exam 1. The first 20 questions are free. In this video, we will be covering the following major categories for Practice Exam 1. Indiana laws and department rules common to all lines. Personal lines regulations. Property and casualty insurance terms and related concepts. Property and casualty policy provisions and contract law. Types of casualty policies. Types of property policies. Let's walk through the format. I'll read each question and its choices. Let's get started. Question 1. Which description best captures the principle of the law of large numbers in insurance? A. It suggests that pooling more risks decreases the occurrence of losses. B. It holds that independent risk exposures must be correlated for accurate predictions. C. It indicates that actual results converge to expected values as the number of exposures increases. D. It asserts that larger sample sizes guarantee actual losses will match predicted losses exactly. A countdown circle appears in the top right. Once it completes, the answer is revealed. You can pause at any time if you'd like longer to think. If you'd like additional practice covering more topics, see the description for our book. The correct answer is C. The law of large numbers states that as the number of exposures grows, actual outcomes tend to approach the expected value. Reason A is not correct. Pooling does not reduce loss occurrence frequency but improves predictability of outcomes. Reason B is not correct. Law requires independent exposures rather than correlation to achieve convergence. Reason D is not correct. Convergence is approximate. It does not guarantee exact matching of losses and predictions. Question 2. For a valid property insurance contract, insurable interest is required at which point in the policy life cycle? A. When the policyholder applies for coverage. B. At policy inception. C. Upon payment of the initial premium. D. When filing a claim for a loss. The correct answer is B. Insurable interest must exist at the moment a policy is issued for the contract to be enforceable. Reason A is not correct. Interest at application is not the statutory requirement for contract validity. Reason C is not correct. Premium payment does not determine the initial existence of insurable interest. Reason D is not correct. Filing a claim does not satisfy the timing requirement for contract formation. Question 3. Which requirement addresses insurable interest in property insurance at the time of loss? A. It must exist when the claim is filed. B. It can attach retroactively after loss occurrence. C. It must be present at the moment of loss. D. It is only assessed during the underwriting process. The correct answer is C. In property insurance, insurable interest is required to exist at the moment a loss occurs to validate the claim. Reason A is not correct. Requiring interest at claim filing does not meet the timing of a loss occurrence. Reason B is not correct. Insurable interest cannot be established after the loss event has happened. Reason D is not correct. Underwriting assessment does not replace the need for interest at the time of loss. Question 4. Which statement best defines pure risk in insurance? A. Risk deliberately assumed to achieve favorable returns. B. Risk offering potential for a financial gain or profit. C. Risk involving outcomes limited to loss or no change. D. Risk that can be completely diversified away in a portfolio. The correct answer is C. Pure risk involves scenarios where only loss or no loss can occur. There's no opportunity for financial gain. Reason A is not correct. This describes deliberate business or speculative risk, not pure risk. Reason B is not correct. Speculative risk includes the possibility of financial gain, unlike pure risk. Reason D is not correct. Diversifiable risk refers to portfolio management, not the definition of pure risk. Question 5. Which description accurately characterizes speculative risk? A. Possibility of loss or no change without opportunity for gain. B. Involves outcomes that may result in gain, loss, or no change. C. Entails loss outcomes that can be predicted with certainty. D. Reflects risks quantified by known probabilities only. The correct answer is B. Speculative risk includes scenarios where there's a chance of gain, loss, or neither, such as investing in markets. Reason A is not correct. That definition matches pure risk, which excludes the possibility of gain. Reason C is not correct. Predictable loss certainty does not reflect the chance of gain inherent in speculative risk. Reason D is not correct. Speculative risk may involve uncertain probabilities, not solely known ones. Question 6. Which scenario illustrates a moral hazard in insurance? A. An insurer mandates specific safety measures before issuing coverage. B. An applicant misstates information on an application to lower premiums. C. A homeowner intentionally leaves a door unlocked because theft is covered. D. Multiple insurers collude to fix policy premiums in a region. The correct answer is C. Moral hazard occurs when coverage reduces the insured's incentive to prevent loss, leading to riskier behavior. Reason A is not correct. Mandating safety measures is risk control, not moral hazard. Reason B is not correct. Misrepresentation on an application is fraud, not moral hazard. Reason D is not correct. Insurer collusion is an unfair trade practice, not moral hazard. Question 7. A collector leaves a valuable antique motorcycle parked in his unlocked driveway without any security devices, confident that his comprehensive policy will reimburse any loss. This situation best illustrates which type of hazard? A. Moral hazard. B. Legal hazard. C. Physical hazard. D. Moral hazard. The correct answer is D. The correct answer is moral hazard, because the scenario describes carelessness or indifference that increases the chance of loss, whereas the other hazards involve intentional wrongdoing, moral, physical conditions, physical, or regulatory factors, legal. Reason A is not correct. This involves dishonesty or intent to commit fraud, not mere carelessness. Reason B is not correct. Legal hazards pertain to laws or regulation changes, not personal indifference. Reason C is not correct. This refers to tangible property conditions or environment risks, not attitude. Question 8. At a factory, technicians have observed exposed, frayed electrical wires around heavy machinery for weeks. They believe any resulting damage will be covered by insurance and continue operations despite occasional sparks. This scenario primarily illustrates which type of hazard? A. Moral hazard. B. Moral hazard. C. Physical hazard. D. Legal hazard. The correct answer is C. The correct answer is physical hazard because the primary risk stems from the tangible condition of faulty wiring. The presence of carelessness introduces a moral hazard, but the question asks for the principal hazard type causing loss likelihood. Reason A is not correct. This involves deliberate deceit or intent to defraud, not merely unsafe property condition. Reason B is not correct. This describes indifference increasing loss probability, but the physical condition is primary here. Reason D is not correct. Legal hazards relate to regulatory changes or statutes, not property defects. Question 9. Under the actual cash value principle in property insurance, how is the loss settlement calculated? A. Replacement cost minus depreciation. B. Fair market value at time of loss. C. Original purchase price minus salvage value. D. Functional replacement cost without depreciation. The correct answer is A. The correct answer is replacement cost less depreciation, which reflects the cost to replace the property adjusted for wear and tear at the time of loss. Reason B is not correct. Actual cash value uses replacement cost minus depreciation rather than market-based prices influenced by supply and demand. Reason C is not correct. Actual cash value is based on current replacement cost, not historical purchase price. Reason D is not correct. Functional replacement cost methods do not account for depreciation factors used in actual cash value. Question 10. Which choice most accurately defines replacement cost coverage for a damaged structure? A. Payment of the current cost to rebuild or restore without deduction for depreciation. B. Amount required to replace property at its market sale value. C. Original purchase cost less accumulated depreciation. D. Predetermined agreed amount regardless of actual replacement expense. The correct answer is A. The correct answer is the current cost to rebuild or restore property without deduction for depreciation, which is the hallmark of replacement cost coverage. Reason B is not correct. Market sale value reflects open market prices, not the cost to rebuild or restore the property. Reason C is not correct. Original purchase cost less depreciation describes actual cash value, not replacement cost coverage. Reason D is not correct. A predetermined agreed amount regardless of expense describes an agreed value policy, not replacement cost. Question 11. In property valuation, what does market value represent? A. The price obtainable in an open competitive market at the time of loss. B. Replacement cost adjusted for depreciation. C. The value agreed upon in the insurance policy schedule. D. The insurer's functional replacement cost estimate. The correct answer is A. The correct answer is the price obtainable in an open competitive market at the time of loss, reflecting supply and demand under normal sale conditions. Reason B is not correct. Replacement cost adjusted for depreciation defines actual cash value, not market value. Reason C is not correct. An agreed policy schedule value is set by insurer and insured, not determined by market forces. Reason D is not correct. Functional replacement cost is an insurer's reconstruction estimate, not market-driven sale price. Question 12. A stated value policy in personal property insurance guarantees which of the following? A. Payment up to the value declared by the insured, subject to the actual cash value if lower. B. Reimbursement based solely on replacement cost without depreciation. C. Settlement at the insurer's estimated market value at loss. D. Coverage for the full stated amount regardless of depreciation or ACV. The correct answer is A. The correct answer is payment up to the insured's declared value, but limited by actual cash value if that is lower, which characterizes a stated value policy. Reason B is not correct. Replacement cost without depreciation describes replacement cost coverage, not stated value. Reason C is not correct. Market value estimates are unrelated to declared value schedules. Reason D is not correct. A stated value policy does not guarantee the full stated amount if ACV is lower. Question 13. What distinguishes an agreed value policy from other property valuation methods? A. A predetermined value is payable without any depreciation adjustment. B. Valuation is based on current market sale price at time of loss. C. Settlement equals actual cash value plus a fixed percentage. D. Payment is limited to the lesser of policy limit or replacement cost. The correct answer is A. The correct answer is that the agreed value policy pays the predetermined value without depreciation, as this amount was set by agreement between insurer and insured. Reason B is not correct. Market sale price methods reflect open market transactions, not an agreed fixed figure. Reason C is not correct. Actual cash value plus a percentage describes inflated ACV approaches, not agreed value. Reason D is not correct. Limiting payment to the lesser of policy limit or replacement cost applies to other policy forms, not agreed value. Question 14. Which factor is generally excluded when calculating depreciation under an actual cash value settlement? A. Physical wear and tear. B. Obsolescence affecting salvage value. C. Effective age relative to useful life. D. Current cost to reproduce or replace the property. The correct answer is D. The correct answer is the current cost to reproduce or replace the property, which is the starting point for ACV but not a depreciation factor itself. Reason A is not correct. Physical wear and tear is a primary factor in determining depreciation. Reason B is not correct. Obsolescence, including functional and economic, influences depreciation amounts. Reason C is not correct. Effective age relative to useful life is a standard element in depreciation calculations. Question 15. After a fire destroys a mobile home, the insurer determines an actual cash value, ACV of $50,000, and a salvage value of $8,000. In this context, salvage value refers to which of the following? A. The amount payable to the insured after accounting for depreciation. B. The estimated resale amount of the damaged property recoverable by the insurer. C. The cost to replace the property with new materials. D. The portion of the policy limit reserved for debris removal. The correct answer is B. The salvage value is the estimated amount the insurer can recover by selling the damaged property, which is subtracted from the ACV to determine the loss payment. Reason A is not correct. This describes net payment after depreciation rather than the expected resale proceeds of damaged property. Reason C is not correct. This describes replacement cost, not the projected sale price of damaged property. Reason D is not correct. Debris removal costs are separate from salvage proceeds and are not part of salvage value. Question 16. A claimant's automobile is declared a total loss, and the insurer pays the actual cash value of $12,000 without reclaiming the vehicle. The insurer has not waived salvage rights in the policy. The insured subsequently sells the damaged car for $3,500. Under insurer salvage rights, how must the insurer handle the $3,500 salvage proceeds? A. Offset the proceeds against the paid loss payment up to the salvage value. B. Distribute the proceeds equally between insurer and insured. C. Allow the insured to keep all proceeds since the vehicle was not retained. D. Apply the proceeds to the insured's next policy premium. The correct answer is A. When salvage rights are retained, the insurer is entitled to salvage proceeds and therefore offsets any proceeds the insured obtains from selling the damaged property against the loss payment, up to the determined salvage value. Reason B is not correct. There is no provision for sharing salvage proceeds equally absent a waiver or specific endorsement. Reason C is not correct. If the insurer retains salvage rights, the insured cannot keep the proceeds without offsetting the insurer's salvage interest. Reason D is not correct. Salvage proceeds are applied to the claim, not to future premiums. Question 17. Which of the following correctly lists the 4 essential elements required to establish a claim of negligence? A. Duty, breach of duty, foreseeability, damages. B. Duty, breach of duty, proximate cause, damages. C. Breach of duty, causation, contributory negligence, damages. D. Duty, breach of duty, causation, damages. The correct answer is D. The 4 elements a plaintiff must prove are that the defendant owed a duty, breached that duty, the breach caused harm, and the plaintiff suffered damages. Reason A is not correct. Foreseeability is part of proximate cause analysis, not a standalone element. Reason B is not correct. It incorrectly lists proximate cause separately rather than as part of causation. Reason C is not correct. Contributory negligence is a defense, not an element of a negligence claim. Question 18. In negligence law, the term duty of care is best defined as A. A requirement to prove actual financial loss resulting from the defendant's conduct. B. A legal obligation to act toward others with watchfulness, attention, caution, and prudence. C. A defense that reduces liability based on the plaintiff's own negligence. D. The point at which harm occurs as a result of negligent conduct. The correct answer is B. Duty of care refers to the legal obligation imposed on individuals to exercise the level of care that a reasonable person would under similar circumstances. Reason A is not correct. Financial loss pertains to damages, not the duty of care itself. Reason C is not correct. A defense reducing liability relates to contributory or comparative negligence, not duty. Reason D is not correct. The point of harm describes causation, not the duty owed. Question 19. Which of the following best describes a breach of duty in negligence? A. Commission of an intentional tort rather than negligence. B. Assumption of a duty without contractual compensation. C. Failure to conform conduct to the required standard of care. D. Satisfaction of duty through reasonable and prudent actions. The correct answer is C. A breach of duty occurs when a person fails to act as a reasonably prudent person would under similar circumstances, violating the standard of care. Reason A is not correct. An intentional tort involves deliberate wrongdoing, not a breach of a care standard. Reason B is not correct. Assuming a duty without compensation is unrelated to negligent breach. Reason D is not correct. Reasonable and prudent actions satisfy duty rather than constitute a breach. Question 20. Which statement accurately distinguishes actual cause from proximate cause in negligence claims? A. Actual cause relates to moral blame. Proximate cause relates to statutory violation. B. Actual cause assesses foreseeability. Proximate cause assesses whether a legal duty existed. C. Actual cause establishes that harm would not have occurred but for the defendant's act. Proximate cause determines if the harm was a foreseeable result. D. Actual cause pertains to the policy coverage. Proximate cause pertains to the tort liability. The correct answer is C. Actual cause, cause in fact, uses the but-for test, while proximate cause limits liability to consequences that are reasonably foreseeable from the breach. Reason A is not correct. Moral blame and statutory violation are unrelated to these causation concepts. Reason B is not correct. Foreseeability is part of proximate cause, not actual cause, and duty relates to element 1, not proximate cause. Reason D is not correct. Policy coverage versus tort liability confuses insurance terms with legal causation. Enjoyed this practice test? Tap like, hit subscribe, and share it with a classmate. Got a question we should tweak? Comment below. We read them all. Find full practice exam books in the description or at ExamPrep.School.